Fantastic. So I want to thank everybody for coming today. I greatly appreciate it. I always love the opportunity to kind of share with people some different insights on insurance. My name is Philippe Lundstedt. I'm known as the insurance guru because I show people the secrets and the strategies that the insurance companies don't really tell you about or don't want you to know, period. And today we're going to be talking about the power of level funded insurance and really how to transform healthcare for small businesses. And from what I was told, most people that are going to be on this call are either solopreneurs or they own a small business, right? So understanding how you can use healthcare and how you can use your benefits to better empower yourselves, better increase your retention, and also help you with recruiting. If any of you are looking to scale your businesses, that typically means bringing in more people and having a system that you can teach other people and expand your businesses. And typically when that happens, benefits usually comes to play and comes to mind of how people can actually do this. I own a company called ProCare Consulting where we focus mostly on small businesses and retirees. That's really where we mostly focuses. And by small business, that's the solopreneur, the entrepreneur, and the small business owner, all the way up to about 1,000 employees. After 1,000 employees, I have a strategic partner that I kind of send everything over to because that's specifically what he deals with, which is what we call medium to large size groups. Usually, large size groups start about like 10,000 employees as your large group, and between 1,000 to 9,000, 10,000 is what you call your medium size groups, just in case if anybody didn't know that. On the screen as well, not only do you see my pretty picture there, you also see a phone number and also my email address as well. You can also find me on Instagram and Facebook and LinkedIn under ProCare Consulting or Philippe Lundstedt. I have both accounts for either one. So if you just want to look up my information there too, and you can also, of course, Google me and see reviews and all that good stuff there. So we'll go ahead and get started with this. Really, we're going to be looking again at the power of level funded insurance, where you can cut costs, gain control, and empower your business, right? So, what is level funded insurance? Level funded insurance is a hybrid solution combining the predictability of fully insured programs with cost saving potentials of self insuring, right? So, it's kind of a bridge between two of the most common things that you see from smaller companies, which is fully insured, and larger companies, which is self insured. This is really a hybridization of the two, which allows you to get a lot of savings. And it's really designed for businesses that are seeking a lot more control. They want transparency of what's happening with their premium dollars, and they're also looking for savings in their healthcare costs that they're offering to their employees. And there's really three functions of employee benefits when you're looking at starting a company, right? You can either do fully insured, which is what most employer groups are doing, is fully insured. You can do level funded, which is really where I specialize and my team specializes is in level funded, or you could do self funded. We do some self funding, but it's really for a particular kind of client that's got a lot of money, bringing in a lot of gross dollars, a lot of net income. Well, really not a lot of net income, where they're able to fully insure themselves and they don't need anybody to kind of help with that. And I'll explain that a little bit later down the line. The most common thing people are doing is called fully insured, right? This is where you go to Florida Blue and say, hey, I want health insurance for all of my employees. Or you go to United Healthcare and say, hey, I want an insurance for all of my employees, right? So with fully insured, you have some predictable costs because there's fixed monthly premiums, right? So every month you're paying a premium and you're getting health insurance in return for that. Typically low risk because the insurance carrier assumes all the risk, right? So you don't have any risk in this. You don't have to do anything. It's the insurance company. They call the shots. They do everything for you. They collect all the data. They rate you and they put you in a pool with 100 other business owners. Okay. It's like a public pool. There is limited savings because there are absolutely no refunds on these kinds of insurances, right? There's no refunds of unused claims. And typically what happens is you get into a original price when you first sign up, and then they start to do major height or rate increases afterwards, right? Like I've seen 96%, up to 96% on rate increases with these insurance companies. And you got to kind of kick and scream. And eventually they'll say, okay, we'll give you some rate relief here or rate relief there. Or you just keep switching your insurance, right? Many companies do that. They'll go from Blue Cross to United to Aetna, and they'll just keep moving around to Cigna and move around because they're chasing a lower introductory premium. But that premium is always going to go up the next year because in fully insured, you can't control who's at risk because it's not just your company, it's 100 other companies. So if you're with 100, if there's 100 different companies in that pool and 50% of those companies end up getting cancer, that's going to affect your bottom line, right? Even though you've got a healthy group, you're going to be affected by unhealthy groups because you're in a public pool. There's also a lot less flexibility on these programs because what will happen is they've got cookie cutter programs. So there's some companies have 12. It's like United Healthcare, there's like 27, and it gets really confusing. And typically your broker is only going to show you 3 different programs, and it's really cookie cutter. You can't make adjustments to it. You can't be like, hey, I like this program right here, but I wish it had an HSA attached to it. And I wish the deductible was only $1,000. And I wish that it was utilizing this network. You can't do that with fully insured programs. You have to pick the one that is exactly written out. You can't make changes to it. Level funded insurance programs are really a hybridization, and really where, again, my expertise lies in and my team's expertise lies in. And the reason I love it is because it's lower costs, right? So the first thing is lower costs. There's a lot of potential savings up front with a level funded program, and also on the back end if your claims are low, right? The second thing is it's more risk controlled because the monthly payments are predictable. Very similar to fully insured, you do have like predictable monthly payments that you're going to pay every single month. The difference is at the end of the year, you're going to have much lower rate increases because they're going by your group and your group alone. They're not going by another group, right? So this can be a good thing and it can be a bad thing, I suppose. If it's a small group and you have, 7 employees, and 5 of the employees are in their 30s, and 2 to 3 of the employees are in their 60s, and you fire 2 of the younger employees and hire 60-year-olds, it's going to change your risk pool because now your average age has gone up. So it really depends on how you're structuring your company and who you're hiring and who you're bringing in. In most cases, people are not firing young employees and hiring people that are in their 60s. But I have seen it happen once before. And the client was like, why did my risk go up so high? Why am I paying more for premium? And I explained to him, because this happened. Now, they also had 13 other employees that they weren't putting on the insurance. So we were able to rectify it by them offering a couple of key people insurance that were younger, and that helped balance out the premiums and bring them back down. The point is, at the end of the year, if they have a healthy year, no matter what the age of the people are, you're going to get a refund on your claims. So if you don't know this, when you're paying premiums for health insurance, about 50% of that premium is going into a claims fund. So depending on how large the company is and how many employees you have and how much money is going into premium, that's going to dictate how much money you have at the end of the year. So I'll just give a simple example. If you had enough employees where your claims fund was $50,000 a year, meaning you got $50,000 in a claims fund, and nobody has any issues in that year. I mean, no issues. At the end of the year, you have $50,000 sitting in a claims fund. The employer would get a check for $50,000. He would get a full refund, because that's how we kind of put these things together, is to be 100% refund. You'll get a 100% refund on the claims left over at the end of the year. And this does not raise your rates. So it's not like you take that refund and the next year they're going to be like, oh, we're going to raise your rates by 78%. No, that's not what happens. Your rate stays the same as long as the health of the group stays the same, but then you get all that access to those excess dollars. So the refund potential is huge on level funded insurance because you can get money back if your claims are lower than expected, right? Moderate risk, some exposure if claims exceed expected levels. And I only tell you this because this is the raw fact of level funded insurance. But what we always do is we build strategies, right? That's something really big at ProCare, is that we're going to build a strategy around you rather than just like cookie cutter, playing chess or playing checkers rather. We like you to play chess. We like you to have a lot of maneuverability, and we like to cover all the risks that exists. So in all of our level funded programs, we always build in something called stop loss. Stop loss might be a confusing term for most of you, but really what that means is max out of pocket. It builds in a max out of pocket for the employer group, so they can never pay more than a certain amount of money, right? So if your claims is $50,000, we put in a stop loss that puts it just shy of the 50,000. So you always have residuals left over in your claims account, just in case if the year rolls over and you have a high claim account that happens, you still have dollars in there. So we try to strategically set everything up so you're never coming out of pocket more than what's in your claims account. Self-funded is very different. This is what like Coca-Cola is doing, what IBM is doing, Microsoft, Costco, Walmart. it's maximum flexibility because it's completely customized for the provider. So like Walmart says, I want to have X, Y, and Z and only offer this to that and so on and so forth. Well, they can do that because they've got billions and billions of dollars that they're willing to put into an account that will pay for any kind of healthcare cost. Most of us on this call, unless I'm confused, as a small business owner, and you're not bringing in billions and billions of dollars that you can kind of put into healthcare. And if you are, then self-funded is great, and we can set that up for you, no problem. Network cost savings, of course, because what happens on self-funded is you're going out to United Healthcare and saying, hey, I want to lease your network. So these companies will literally pay United Healthcare to slap their name on their card, right? So it's like Walmart, United Healthcare, and they'll pay them that money and lease out their networks. So they lease out their contract negotiations, they lease out their network, but United has zero administration with the actual plan, right? So that's kind of how self-funded works. There is a lot of data transparency. Again, you own the program. You've got a whole HR department that's negotiating everything and going through everything, and you've got a billing department that you're leasing out. So you do have access to all the data. You do on level funded as well. You have a lot of access to exactly where your dollars are going. You know who's getting what, how much is going in the claims, how much is coming out for doctors and expenses. And the reason that's important because is we always like to look out for fraud, right? So we're like watchdogs at ProCare. We're very, very concerned with fraudulent claims. And, there were laws passed back in 2021 that really, really put a lot of oversight on insurance companies and providers that they're not allowed to do any fraud. And if there's any fraudulent claims, we actually go through a lawyer group that will then go back into the history and get a refund on all the fraudulent claims that happen. And roughly about 17% of all claims that are filed are fraudulent, believe it or not. So it's pretty intense. On the self-funded, there is a massive risk, right? There's a lot of high risk because the employer is assuming all of the risk. And the cash flow volatility is existing there too because expenses fluctuate with claims, right? What an MRI costs today could be completely different than what it costs in 6 months. So there's fluctuation that happens. But when you have a benefit and it's like, hey, your copay is X amount of dollars and it's contracted rate for the year, you guys are good because on level funded and fully insured, it's already set for that 12-month standard. So self-funded isn't probably anything that anybody on this call is going to be doing. You're probably looking at either fully insured or a level funded product. Now, why small businesses struggle with traditional healthcare plans, and that's the fully insured plans, is one, the rising premiums year over year. Again, every year seeing rising premiums. And for me, it's like a hot button when I talk to someone, they're like, well, it wasn't that bad this year. It was only 15%. And I'm like, oh my gosh, 15%. If that's not bad, tell me one a year that it was bad, like 30%, 40% raises. And they're always like, well, the economy's going up. And a lot of people put out of sight, out of mind when it comes to health insurance. It's kind of like this necessary evil that you have to have, or something you forego because the prices are too expensive. There is really no transparency with fully insured programs. You don't really know how your money's being spent. The insurance company is taking your money. They're not telling you how much is going in claims, what they're paying the doctors, what they're paying the admin, what they're paying in commissions to the brokers and the agents that are selling you the policies. There's really no flexibility for customization on the programs in fully insured. You're offered like 12 programs. And as an employer, they're like, hey, narrow this down to 2 or 3. Most companies will just tell you 2. And then you can only offer 2 programs to your employees and potentially 1 extra program for like the executive branch or, CEOs and owners and things of that nature. We call it a platinum, silver, gold plan kind of a function. And then, of course, impact on cash flow and profitability because you've got this unknown of what next year is going to look like, and you don't have access to your claims if you have a healthy year, which, by the way, I mean, this is just simple statistics, but out of 4 years, 3 of the 4 years are going to be healthy years. And 1 out of the 4 years is going to be a year where you're dipping into your claims more than anything else. So 3 out of the 4 years, you could be collecting refunds. And remember, those refunds, they don't affect your premium. If you take 100% refund on the claims, your premium's not going to go up next year, especially because you just came off of being a healthy group. So that's something important to understand. So it's almost like double dipping in your savings and your cash flow. Level funded is going to solve a lot of these problems. Again, I kind of covered some of this, but predictability, fixed monthly payments, reduce risk of unexpected costs, right? So there's fixed monthly payments every single month that you're making towards the insurance. There's a lot of transparency. You're going to get a lot of insight into exactly how your claims dollars are being spent. So you can see exactly what the doctor's collecting. This is kind of what I was talking about before about fraud. If you notice, like, hey, I had an employee that went to the hospital and they had a surgery and there was 6 MRIs done, right? Like, that's a red flag. Like, why were there 6 MRIs done? Or, they broke their leg and there was a head CT. Like, why did that happen? If they broke their leg, why was a head CT ordered? And why is the head CT $8,000? Like, what's going on here? That's fraudulent. And a lot of the transparency, the claims allows you to do that. And we actually help you do a lot of that, is to kind of look over things and say, hey, here's some red flags. We need to bring this up and get our legal team on it. Flexibility is really, really important with Level Funded because you have a lot of availability to hand tailor these programs, meaning you can choose what networks you want. You want, First Health Network, you want Aetna, you want, you know, you want to be able to utilize United Healthcare. You want to be able to utilize Cigna. You want to be able to utilize, PHCS. There's all these different networks, both private and commercial. Commercial networks, most of you are familiar with. That's what we call BUCA, which is Blue Cross, United, Cigna, and Aetna. Those are the most common ones. And then there's private ones like PHCS, Multiplan, Beach Street, First Health, Priority First. There's all these, are Health Smart. There's all these other networks that are massive, but they're unknown because they're not commercial companies, right? Potential refunds. This is one of my favorite things. There's nothing better than delivering a check to an employer. For last one I did was for $27,000 for a company called Cleanse Oil. And there's nothing better than that, because then they're like, what is this? And I'm like, this is your refund check. They almost forget about it, right? And to get a check for 27 grand when you're not expecting it, that makes a big difference for a small group, right? You can just talk about 6 to 8 employees, and making that much money on the back end is pretty impressive, especially their rate increase was 1%. Right? 1% rate increase because the economy was terrible, right? And typically it takes about 18 months for the insurance companies to catch up to whatever inflation is doing, right? So there is a little bit of a lag there. So the refunds are massive. And, a life cycle, when we're looking at Level Funded, just to kind of break it down even more, is the premiums that you're paying, a portion of those premiums going into your claims. And at the end of the year, we do a reconciliation of what was spent and what wasn't spent. And then we issue a check and a refund. So that's basically the life cycle of a Level Funded program. So it is a very powerful tool for business owners to use. And some of the average savings that we're looking at is anywhere from 10 to 25% compared to traditional fully insured programs. So that's a massive, massive difference off rip, right? Like right off of the beginning, we're able to save people that much money up front. And then as the years go by, it just compounds more and more and more. And the beautiful thing about Level Funded is many times we're seeing people stay on the same program for about 5 years, which is unheard of in the health insurance industry outside of doing self-insured or, fully insured. You're just getting hammered over the head with premium rate increases and you just can't be bothered to change it because it seems confusing or you don't have the time and it's kind of out of sight, out of mind. You don't want that to happen because you could be flushing dollars down the toilet. And there's a lot of times I meet, business owners and I'm like, where are you at with scaling? Where are you at with growth? And they're like, well, I had a couple guys leave this year to go somewhere else. Why did they go somewhere else? Well, because this other company is bigger than me and they offer 401k. Well, why don't you offer 401k? Well, I just don't, it's just not in the budget. And then come to find out, they've been paying 20% rate increases every single year for their fully insured program, where if they had been on a Level Funded program, they would have probably had enough money to fund a 401k program and offer some kind of financial benefit to their employees, right? So this is one of my favorite things in the whole world, is helping small business owners make that transition, because I'm a small business owner and I scale my business all the time. And having benefits and having bonuses and having all these things available is how I recruit and retain top talent. And I think that's super important. So I love going in with a company and seeing them grow. It's selfish in a way, because, the more employees they get, obviously the premiums go up and I make more money. But not just that, I get to see a company grow and thrive and flourish, and then get to deliver that check. Like, I'm flying to California to deliver checks, right? Like, I love it. Just to be able to go to employers, say, hey, listen, I want to take you out to lunch. I got a surprise for you. And I deliver that check. There's nothing better than that right there. I got to tell you, it's very, very fulfilling for me. And I have some examples right here on Level Funded. On average, it's on average, and by average, I'm looking at a company about 20 or above. It's about a $20,000 annual savings. And then, of course, employees are getting better insurance. Most of the Level Funded programs would do. Most like 98% are PPOs, right? So you can go in and out of network, choose your own doctors, no referral processes, very little authorizations that need to be done. Obviously, there's always approvals that kind of have to be done by the insurance company. You can't get an MRI if you haven't had an X-ray, right? You can't just walk into a diagnostic center and say, hey man, just give me an MRI because it's Saturday and I feel like getting one. It doesn't really work like that. You actually have to have it ordered. So there are some steps that exist in all healthcare, but for the most part, you don't have any more flexibility than you do with a PPO. I mean, that is the most flexible program that you do. And all of these level funded programs we're doing are flexible in that way. Now, if you do want an HSA, we can also do that, but we build them on the back end of a PPO rather than having to go with like an HMO that's a massive deductible just so you can get an HSA. We can do it on a PPO basis and help you build an unbelievable system that's custom tailored for your company. And level funded is exactly what allows us to do that. So the premium allocation, if you look at this chart right here, about 15% is going into admin, about 10% is being added into what we call refund potential, and 25% is going into stop loss, and the rest is going into claims. So that stop loss is your max out of pocket. That is the insurance protection for your claims, meaning that if you have $50,000 in your claims account and you end up having $2 million worth of claims, you're not required to pay the $2 million. It's the 50,000 that's going to come out of your claims account. And then the stop loss is going to pay the rest of that money, not you, but the stop loss company. And we always do that. It's called a third party association or a TPA. We always do that through the TPA. So we're setting you up in a way that there's never any risk of you spending more than what you're putting in. And that's super important with level funded, that you're getting the stop loss. It's very, very important. Something that we're really, really happy with, because we never have clients being like, oh my God, I had to pay an extra $200,000 for healthcare because one of my employees got cancer. Like, that's a terrible thing to happen to a business owner and an employee. Like, that's a rough relationship to end up in. Administration is commissions, right? Or management and all the people that are working for the insurance company. And then of course the claims, the 50% is what you have access to get back. And the reason that there's 10% kind of residual there is like what I was talking to you guys, we call it run out. We always look at an 18-month spectrum, because sometimes you'll have a claim that happens in 2024 and they'd actually don't bill it until June of 2025, right? So there might be like a 6-month overlay. And that's why we keep that refund potential in there, is just to make sure that if there's any dip into the claims, that you've got something in there. So it's just a protective measure. What sets level funding apart from everything else? And I know a lot of this is regurgitated and things that I've already said, but it's just really important that I kind of drive these things home. The stop loss insurance is what protects against high claims. It is phenomenal. It's having a separate insurance policy to cover your insurance policy, to keep it in pretty layman's terms. Customizable wellness programs. There are ways that we add wellness programs into your insurance, which allows you to enter in a whole different world of FICA tax dollar savings, free insurance for your employees, because they're literally getting spiffed for doing wellness things. And what is wellness, right? Most people think wellness is holistic doctors or something like that. Well, not always. Sometimes it's counseling, grief counseling, marriage counseling, alcohol counseling, smoking cessation classes, obesity things, weight loss challenges. There's a lot of things that make a healthy group that will allow more productivity from employees. And a lot of that is mental therapy, right? I mean, I don't want to say it's a buzzword, because I use mental therapy, right? And I think that's super, super strong that you're able to offer that to your employees. And at many times it's at no cost at all to you. So there's ways that we can do customizable wellness programs and add them into the level funded products. You can't really do that with fully insured. Data analytics, you have all of the data. I mean, you know exactly what's going into your claims. You can actually trend everything out and see exactly when the years that you people were more sick, and what time of the month that was, and what month that was, and what season that was. So it does give you a lot of insight. And if you're anything like me, I love charts. I love them. I love to see all the numbers. I love to see how the things flow. I love the data of it, because I feel like a detective. Like, I know the months that my brokers are busier and the months that my brokers are slow. And then I know when to like put in certain kind of meetings or sales contests to boost productivity. And by having those numbers and having that transparency, I'm able to grow my company, right? Because growth and scale are two different things. I'm able to grow the company which eventually allows me to scale it because then I'm building systems around that growth. Same thing is to be said with data analytics around your benefits, right? It's important to know what's going on and where your dollars are being spent. And of course, nationwide PPO networks. These PPO networks are not just like for Florida or just for Tampa Bay. This is nationwide PPO networks because some of you may have employees that are working in Michigan or working in Idaho or working in Texas, right? So it's important to have a nationwide PPO network. So no matter where your employees are or where they're working or whether they're remote or not, they have access to doctors nationwide. So that's something really, really big that we love about level funded insurance as well. Um, why employees, of course, love level funded programs? Well, one, it's lower out of pocket costs. Who doesn't like that? As an employee, you want to have less money coming out of your pocket to pay for your health insurance. You have an access to robust provider networks. And I've met a lot of employers who are like, well, I don't really go to the doctor, so I don't really care about the doctor network. And I said, well, it's not really for you, right? When you're getting benefits, yes, it's for you and your family, but more so, it's for your employees. Because if you have a happy employee, they're going to work harder for you and they're also going to become more loyal. So there's a big part of that in retention and also in recruitment because there are many people. Here's my thing that I tell a lot of business owners. I said, if you have somebody that's looking for a W-2 job, right? They want to be an employee, a W-2. They're not necessarily in it for the money because if they were in it for the money, they'd be doing what you're doing. They'd open their own business. They become a business owner. They'd be an entrepreneur. They would do that because that's where you get all the profit, right? But they may not need to do that. What if their husband or their spouse is an entrepreneur? And the reason that they're getting a W-2 job is because they want to be able to pay for daycare and they also want to get the benefits to make sure that their kids have great health coverage and they can see good doctors. And if they do need a surgery, they can get it covered. So there's a lot of reasons why, having a smart benefit package really resonates with your employees, especially for retention and also, of course, for recruitment. Because how many times, I don't know if this has happened to you, but it's happened to clients that I've had where they're like, well, they went somewhere else because the benefits were better, right? And then I bring them on and I say, okay, let's change your benefit structure and see if it makes a difference. And it always makes a difference. It always changes things when you have a better benefit that you're able to push forward to employees. It brings in that whole family concept, and everybody runs their company the way they want to run it. But, for me, one of our core values is family. We treat all of our clients as if they're part of our family. Okay. Treat my clients like I treat my wife. I'm very, very attentive. I'm very accountable, and I want to impact their lives by adding value to everything that I bring forward, right? That's why I hand deliver the checks. When I get a referral from a business and that business is not in the state of Florida because I live in Land O'Lakes, I literally get on a plane and fly to where that business owner is and sit in front of them because I want to make a difference to the people that I'm dealing with. So a couple of other things is improved wellness initiatives that are tailored to the needs. I kind of went over that. There are a lot of wellness programs that we can put you in where you're getting free insurance, free therapies, and then the employer is actually getting FICA tax dollars as a refund for offering that. There's a lot of laws where the US government is going to actually give you money. They're going to spiff you for giving wellness products to your employees. And then your employees end up having a tax savings on that. It's a little bit more complicated to explain. And hopefully if I get invited back to this, I can explain how a Section 125C program works and how we tie those into level funded. Remember, again, I don't play checkers, I play chess. So the strategies that we put together are hand tailored for each and individual business owner on what exactly they want to see their benefits do, what they want the benefits to generate, because it's so much more than, hey, I can just see the doctor, right? There's just so much more to it. And of course, transparency about benefits and claims usage. You are going to know the data and the analytics around what's going on with your insurance and where your dollars are going, which for some people, they're paying $2,000, $3,000 an employee and they're like, I don't know where the money's going. But all I know at the end of the year, I got a 28% rate increase and no one went to the doctor. Like that's intense. And some people don't know why that's happening because fully insured is never going to show it to you. Some success in action, small business case studies, 25 employees previously fully insured with a raising premium about 12% annually. That's the challenge right there. The solution is transitioning over to level funded. The results is a $15,000 savings in 1 year. The employees gained access to telehealth and wellness programs, as well as a PPO network, which was much larger and much more robust. And they received a $5,000 claim check at the end of the year because that's what was left over in the claims account. So this is just, if you guys want to take a snapshot of that, this is something that you can kind of go back to and say, okay, what's a case study actually look like? And what would look like for me? Because maybe you're in this case, maybe you have 25 employees and maybe last year you got hit with a 12% to 20% rate increase. And it was like, oh my goodness. And then what was it last year and the year before? Because compounding interest is a very interesting thing and it's a very real thing. So try not to be effective on the negative side, right? It's okay if you're in the market, right? Or you're investing in something and you're getting compounding interest. That's always a beautiful thing, right? But if it's happening against you, right, and your premiums are going up, compounding through the interest, that's not a good thing. So that's something important to know as well. Level funding is going to give your business a major advantage. Again, attract and retain top talent with better benefits. You free up cash flow for reinvestment, meaning that money that you're getting back, you could pay out into bonuses. You could do company retreats. You could do 401k matchings. You could create some kind of investment account for your employees, right? And you gain a competitive edge in the marketplace by offering innovative healthcare solutions. Again, that all goes back to retention and recruitment because you may have a larger company that's offering health insurance that's better than yours because you're on a fully insured. You move over to a level funded and maybe you don't know, maybe you just say, hey Philippe, I just want to see what the options are and see if my employees would react positively to this. We can do that in probably about 24 minutes because we use a lot of AI to create our actual benefits, and up to 150 people we can issue out health insurance without collecting any health apps. So that's really, really impressive. And I can do that in about 24 minutes because, again, I use AI that scrubs the internet and scrubs the Medical Information Bureau and lets me know who's at risk. And if those people are at risk, it'll literally pinpoint those people out. So many times I'm doing a group of 100 people and I only have one or two health apps that I need to pull, right? Because everybody else has already been scrubbed and they're good to go. And all I have to do is click a link and they're enrolled. So we actually help a lot with that side too, because many times I meet companies that are like, well, I just don't want to do the work, right? Like, I don't want to have to go to every single employee and explain the insurance and have all these applications and have them fill them out and blah, 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 because that's very reminiscent of fully insured. When you're doing level funded, we actually assimilate all that responsibility. We are the ones that are explaining the insurance. We are the ones that are walking people through how to enroll, how to sign up. We typically do it in person if it's possible. Sometimes we have to do it through like a Zoom or virtual means, but we stay on top of those things so we can alleviate your HR department from having to do it. That's a big part of why partnering with ProCare is an amazing thing. So, like, partnering smarter healthcare strategies with us and why we have years of experience working for small businesses and implementing level funded solutions. We design plans hand tailored and specially tailored exactly to the employer or the entrepreneur to figure out what's going to work best for you. Full transparency of visibility into everything. And again, a lot of advocacy. We literally work for you, not the carriers. I could care less what carrier you go with. I don't care if it's United, if it's Aetna. I get paid all the same. It makes no difference to me. There's not one company that's going to pay me a bonus or give me more money if you're with them. So I don't have a bias in this. My bias is what's best for you and what's going to gain you value and strategy and money back at the end of the year. That's our main concern at ProCare. Again, tailored benefits that are just for your company is, comprehensive analysis. Unlike a lot of brokers or agents out there who only provide like cost estimates, we're going to offer you like detailed cost management analysis of your entire business when it comes down to the benefits that you're offering. So we really give a lot of details. I believe how you do one thing is how you do everything. So if you're in doubt of that, just let us know. We give you a free consultation. We run through everything. And the amount of work that we put in the beginning is what we put in the middle and what we put at the end, right? So we're constantly with you because we invite you into our family and we treat it like that. Again, customized strategies that we're doing that are hand tailored for you. We use more of an advisory approach where there's more of a deep understanding of your group's demographics. We're going to ask you a lot of questions in regards to that. We listen to the population's needs. Like, we want to know, for lack of a better word, we hold town halls, right? Where we want to know from employees, if it's okay with employers, what's going on and what they'd like to see improved, because many times the employers, you don't know. And if you don't know, we like to help facilitate some kind of round table or some kind of town hall. We're able to hear employees and how they're reacting to things and what they like and what they don't like. And of course, diverse funding models, right? We offer a range of options, such as, we do fully insured, of course, if it's something that you have to do, meaning you have an unhealthy group or you got a lot of risk, you may have to do a fully insured. HRAs, HSAs, partially self-funded, which is really level funded, and captive programs. And we do that to maximize employee retention. In fact, we also do the 401ks. I work with a strategic partner that does all the 401ks, annuities, and life insurance policies on the back end, whether it's a key man policy, or if you're trying to get an SBA because you're at that point where you're like, hey, I do want to scale, but I need to get an SBA loan because I need to get 40 trucks on the road and I need to get it. Plus I have this, soundproof, you know, absolutely bulletproof strategy that's going to work and how I'm going to triple my business. I just need the funding to get there. We help you do that by introducing you to the SBA directors. I know a lot of them because that's another side of our business that we do is our life insurance side. All we do is SBA collateral loans. That's all we do, right? In our life insurance side, that and key man policies. So we're really big on that. So there's a lot of different things that we can do to try to help you grow as a company just outside of the basic employee structures. More than an agency, again, we want to be a partner with you. We invite you to be like a family member. We have a collaborative process where we're really evaluating all of the plans that are available. We're looking at the industry constantly. So we're benchmarking the industry and we're looking at, the competition that's happening on a regional landscape, not just a national landscape, but regionally, locally, where you're at. What are some new programs coming out? What are new tax laws that are coming out? What are ways that you can kind of save money on the back end and the front end with your insurance? We're constantly looking at that and developing strategies so that you're winning in the game of insurance. We maximize the cost containment and suitability for long-term benefits, of course. And by doing that, we're looking at what plans that you're on and who's using what. And we're able to have a lot of that analytics that we can see where we can move people around. So where you have the best cost and your employees are getting the best insurance possible. And of course, a support structure that advocates for you, right? We want to make sure that you have somebody that you can reach out. We're like an HR department to your HR department, right? So like when there's an issue or a problem, we give you a direct lifeline or advocacy that kind of filters you between you and the insurance company. So whenever you're going to the insurance company, you're equipped with the right questions on that you need to ask. So you shave a ton of time that you might be wasting when dealing with an insurance company, because many times you call an insurance company and you're talking to somebody that makes $7 an hour in another country. There's nothing wrong with outsourcing, but you got to have your expectations, right? If someone's getting paid $7 an hour, you're probably going to get a $7 an hour answer. And I don't really like that. I would prefer that you call us first, and then we kind of help prepare you with expectations on knowing exactly what you need to do next. And that way you're not caught by surprise or on the phone for 3 hours, not getting your questions answered. And then you call us, but your emotional level is like way up here, where we like to have you here where you're still happy, but just slightly confused. And then we kind of help walk you through the process and give you the right expectations so that you're not like, you're not caught by surprise. You know, Partner and benefit success, it's by combining our expertise, our personalized services, our advanced technology. We really help create that benefit program that's going to attract, retain, and engage your employees, right? Again, we use a lot of AI to help keep this process streamlined and easy, and we can pull numbers very, very quickly. And it's never a waste of time for us because, we either learn from an experience or we win in an experience. There's no losing at ProCare. There is no losing. That's not our mindset here. There's never such thing as a waste of time. It's a gained opportunity and it's a gained experience, right? So we really, really look forward to earning people's business by doing the work and by showing you how we do one thing is how we do everything. And, we build a future that's built on benefits, and it's designed for your organization's success. Like, where do you want to go? We are the GPS to get you there when we're talking about employee benefit packages. So that's pretty much my spiel in kind of like I would say a short run, but it's been about 40 minutes. So I'm sure many of you are like, oh my God, there's a lot of information about, you know, health insurance, which is not the sexiest thing in the world, right? There are better things to talk about, like how do I make money and all that stuff. But really, if you use the strategy of benefits in the smartest way possible, you are going to make money on the back end on these things. You're going to have great years where you're going to get, a lot of refunds. And then when we initiate some of these tax saving strategies that exist as well, oh my goodness, you can just compound a lot of things and give employees free insurance, give yourself free insurance, and really save a bunch on FICA tax dollars, depending on how many employees you have. So it's simple and easy. You can schedule consultation and explore these with us. We can provide you a snapshot of your current plan for free comparison. And really all we need from you is a census. If you have a census, you can send me a census. And from that census, I'll be able to run numbers for you and kind of be prepared so that when I meet with you, I can show you different things and you can let me know, well, hey, I like that. I don't like that. Could we kind of do this or do that? And I'll be like, yeah, no problem. Let me take that information, go back to the drawing board and get it done for you. And I could probably deliver that information back to you in about, like I said, about 24 minutes, depending on what I got going on that day. So I'll kind of leave it at this and see if anybody has any questions for me. I know I covered quite a bit. So let me stop that share. And if anybody wants to unmute and ask me any questions.
I've got one for you.
Yeah.
So when I first started, we had more than 5 employees, and we were able to get on a corporate account, like a corporate healthcare plan. And
Great.
then what happened was we lost a significant amount of business due to various reasons, but we lost the business and unfortunately had to lose the employees. And we actually lost our healthcare coverage because we dropped below 5 employees.
Yep.
So what we've been doing is we pay all of our employees healthcare, but we have to send them either to have them find their own provider if based on where they live, or to use the marketplace. And
Yeah.
then what we find with the marketplace is if their salary is not if reported correctly when they sign up for it, they end up owing
Yeah.
more tax than what they do. But
Yep.
we are just I think we're on the cusp of winning some business where we're going to need about 20 employees.
Hey,
How
congratulations, brother. That's great.
Thanks. How soon, like, what is it seems like a catch 22. It seems like, well, in order
Sure.
to get the healthcare in place, we have to have the head count in place. But to get the head count in place, we need to have, we want to provide insurance, so we don't want to have to say we hire the first three, and it's like, well, we still don't qualify. You got to hold tight. Like, at what point can I go back and get a corporate plan? Is it, hey, the agencies will take it on good faith that yes, we are hiring and we're actively hiring and we want to have it in place, or am I sort of just out of luck until I break that 5 threshold on a full-time basis?
No, I mean, you could do three. So I can get it down on a level funded. I can do as low as three. And what I use is I use Allstate has a brand. So Allstate bought National General, and then Allstate will use either Aetna as the network or Cigna as the network. And it's a PPO network. And I can do 3 employees on Allstate. The other thing that I can do as well is called associations, right? This is something I didn't cover in here, but when you're a solopreneur or a smaller business, like a smaller of the smaller businesses, which there's nothing wrong with that, right? It all depends on when you have that year and you start to do the growth, right? And then you can scale. There's things called association plans. And what I do is I put you in an association with like a million other people, and it gives you the buying power of a company that's $1 million company. So then I'm able to put you on a Cigna, Aetna, Blue Cross kind of program, which is much cheaper if I do it that way than if I just put you on fully insured.
And so let me ask one more question.
Of
So
course.
say for example, I'm ramping, I say, okay, we're consistently at the 3 level. I'm locked into that, right? It's not like, oh, we're going to provide something for the 3 level, and then 2 months later, when we've got five and more, and we're somewhere between 5 and 20. It's not that easy to just drop that 3 level and then move, right? I mean, I assume you would want us to stay on that PPO plan for at least a
A
year or
year.
until the new year, correct?
Yeah, yeah, and the reason I want to do that is because I don't want you to lose any claims dollars, right? Like if you go to a new company, the whole process starts over again, and the money that you've put in, remember, 50% of it is going in claims. And if your first year on the plan is a healthy year, you're going to get all that money back. It means 50% of your premium you're going to get returned in your pocket with no harm, no foul. So I typically say you don't want to leave. You want to be on it on level funded. You want to be on at least a year. On fully insured, nah, you jump off those things whenever you want. There's no contract period on there, right? So you can jump off fully insured and sign up for something else. And many times, if you're on fully insured and you jump over to a level funded, I can get you rate relief too. I've gotten people 18% discounts on rate relief because they're moving from a fully insured to a level funded. And when you're adding people to level funded, it depends on the company, but there will be like open enrollment periods, and it's typically a 90-day start time anyways for most employees, where you're like, hey, you got to work here 90 days first, and then we'll offer you insurance. So there are ways to add people from a group that's 3 to 5 to 20, because really the Allstate is super strong all the way up until groups of 50. After you get past 50, I'm going to move that out and probably go with a headhunter that we use called HIT. That's our AI version of stuff, because then I can really customize plans and get major discounts. So when it's between like a starting point of 25 to 250, I use this company called HIT because it's this health and technology. It's really just a platform, and it allows me to build like 400 different variations of insurance programs for people where I can really customize things. And it's all based on AI. So it's super quick. It's super reliable. And I mean, I literally have closed deals in 30 minutes with this software. So it's just really, really strong. So I know that's a little bit of a complex answer for the question that you asked, but it really depends on what you want, right? So I guess,
Gotcha.
Michael, what I could say is, like, if we had a one-on-one conversation and you gave me a census, I can make this make a lot more sense for you by showing you the programs that are available. And as you grow, we grow with you, right? We say, okay, now we got to move over to this, but let's wait to the end of the year because you're having a healthy year and we can extract out your claims dollars. But if you're having a terrible year, you might not want to be on that plan, and it doesn't matter to switch over, right? So it really depends on the circumstance that you're in. Of
Gotcha. I appreciate that. What I'll
course.
do is I'll wait to reach out to you until it's a little firmed or we win the business. That way I
Nice.
don't want to burn your capacity right now. But thank you for that.
No worries. No worries. Perfect question. Does anybody else have any questions? No worries. I totally understand. And guys, you have all of my information. You have everything that you need from me. If there's any interest in finding out exactly how these programs can work specifically for you, that's typically the best move to do. Meet with us one-on-one, either myself or Kevin. Usually it's Kevin that does this. He leads my entire group division. And we really go through all of this with you. We partner with another guy named Micah that helps us. He helps kind of engineer these programs with us as well. We'd love to be able to show you a couple of options and see if it works for you. That way, at least you have some kind of pinpoint of saying, okay, this is at least what I could be doing with level funded, or even with your fully insured if you want to shop that out. Or if you're so big that you want to go self insured and figure out more about that, great. Or if you're currently on a level funded program and you're not taking advantage of a Section 125C tax code, let us know. These are completely legitimate things that you could be doing as a business owner and making money on your benefits and offering your employees free health insurance, right? So I would say definitely it's worth it to have a conversation with me. You have my information. The phone number that's on there is for my assistant. So I'll actually give everybody my cell phone number on the chat. I have an office, brick and mortar, here in Land Lakes. If you have any questions for me, just you can text them over to me. You can set up with me, no problem. Or you can call this 813 number and you can set up with my assistant and she'll get you hooked up, or you can just send me an email or just visit me online, right? You can go online and see my presence on there as well. You can see my family and all that stuff. I'm pretty transparent about who I am. So you can look up Philippe Lundstedt on Facebook. You can go to FT Lunds on Instagram. You can go to Philippe Lundstedt on LinkedIn, or you can go to ProCare Consulting on either Instagram or on Facebook and see everything about my company.
I'll be in touch. That's why I wanted to get
Amazing. I look forward to speaking with you and finding out a little bit more about your business. Again, at the very least, I just want to know what everybody does in their business because I love business. I'm a serial entrepreneur. I have multiple companies and I love the sport of business. I literally call it a sport. I was talking to a friend the other day and then we'll be done, but I was having dinner with a guy the other day and he was like, man, I don't have any more friends anymore since I started my business. And I said, listen, man, if I can't even have conversations with people if it isn't about business. Like I'm just that type of person. I'm like, I want to know about someone else's business so much. It's like, for me, it's invigorating. So if just to have the conversation with me, you have my cell phone number, give me a shout. I'd be happy to connect with all of you.
the problem is nobody understands business, so it's hard to talk to a entrepreneur.
Yeah, it can be. It can be. A lot of entrepreneurs haven't really made that step yet, right? They're still in the discovery phase. They're trying to figure out what their dynamite is. And then for some odd reason, most people move from that discovery phase into a scaling phase. And they're like, I'm going to scale the company. I'm like, well, you don't have a company because you don't have systems, you don't have things that you own. Like there's nothing there. You gotta discover and then you've got to grow. And then once you grow, you can create systems that are repeatable. And once you can create systems that are repeatable, that's the time to scale. Because if you scale from just discovery, you're going to spend a lot of money. It's what we call throw spaghetti on the wall, right? See what sticks. That's a terrible option. You need to dial in systems and figure things out. Believe me, I could talk another hour on this stuff right here. Now, I'm a big systems guy, big automation guy, big systems guy, big structured person. So I think there's a lot to that. But yeah, no, please, anybody that wants to reach out, please let me know. So are we saying 4 employees? You, the owner, and 2 other employees? So if that's 4 people, yeah, there's definitely options you can do. And remember, guys, with the With the association plans, you could be an individual. So I've got friends that are solopreneurs that have group insurance. And why? Because I put them into an association. And now that they're in the association, they have an individualized plan that's a commercial group program that's cheaper than what they would be spending on the marketplace, because these guys don't get tax credits, right? Because could you be a millionaire and not own a business and be a solopreneur? 100%. There's tons of people that do it, right? You look at all the people that are doing YouTube money, right? A lot of those people are solopreneurs, but they're not getting any tax credits. So if you don't get tax credits from the marketplace, I wouldn't use the marketplace. But if you're a business owner and you're writing off a ton and your AGI is like 50 grand because you're investing $200,000 in your business every year because you're in that kind of that growth phase where you're trying to figure it out, using the ACA or Obamacare can be a huge tool for you, because you're able to leverage the fact that you're going to get these huge tax credits, which drops the cost of your insurance considerably low. But if you're healthy and you're wealthy, you're not going to get tax credits, but you can leverage your health against the private market and get cheaper plans through associations. So I do a lot of that. Again, just having a conversation with me and seeing where you're at, I can help kind of give you a little bit of a GPS of like, this is where you want to go. This is the road that you should take. You know, this is the road that's going to be the least amount of traffic and the least amount of problems, and it's going to get you to your destination quicker. Awesome. Well, guys, I'm going to wrap this up and go eat some lunch. I'm sure everybody else is going to do the same thing, unless you had the convenience of eating on the call, which I wouldn't have known because I'm doing all the talking, right? Guys, thank you so much. God bless. Have an amazing day. And I look forward to hearing from you and learning more about your businesses. Bye now.